that. Gautam, hi, good morning. Decent recovery, Gautam, actually from those 52-week lows. But does it look like in the near term we may have bottomed out or bottomed out for good?
Good morning. Well, I think a large part of the market could have bottomed out. I think that's been our view for the last 6 weeks, that the markets are extremely oversold, and I think most of the negatives were discounted. So as the Nifty got close to that important number of 21,800, we were very clear that margin of safety and risk reward was once again in your favor after almost 5.5 months. I'm not in the camp which believes that this is going to be long drawn and the markets are going to stay in a bear market for another 15, 18 months, because the average decline on the NSE is already about 40%, which means the damage that could have happened over 18 months have actually happened in 5 months. And I think cycles have shrinked given what markets are doing these days, and given the fact that discounting happens really fast. So while for the Nifty itself, I cannot say with confidence that the recent low was a bottom. There is a possibility that we might find resistance at 23,050 or 23,250. Thereafter, possibly turn around and possibly retest the recent low once. But that's really not important. From a medium-term, long-term investor perspective, even current levels is a great buying opportunity because a large part of the market, many pockets of the market, many themes of the market would have bottomed out. So I don't think the Nifty itself is going to move big on the way up or on the way down. It's going to be more of a range-bound market for the Nifty itself. But if you're in the right pockets, there is serious money to be made over the next 6 to 12 months.
Hold on to that thought, Gautam. You've got us all ears. But let's first talk about the Nifty. What's the range that you're calling for the year ahead, both on the downside and upside?
Aisha, there are two camps in this market. There is this one camp which is aggressively talking about this being the greatest buying opportunity in decades. And there is one camp which believes that this is a local problem. India corrected first. Now global markets are correcting, and therefore we are going to be in a difficult period for many quarters to come because there is a genuine slowdown and earnings are not matching with India's valuation. So these are the two camps that is very visible and seems to be debating every single day. I believe there is a third camp, and I want to be in that third camp, which believes that the market is not going to go up much and go down much because there are headwinds and there are tailwinds, after the kind of fall that we've already seen. So 21,800 thereabouts, I think would be a very important support, and 23,500, 24,000 is going to be sort of a resistance. So I think we have got into a time correction phase. The price correction more or less is done with the weakness of the last 5 months. Now for the next few months, as we digest the next couple of quarters of earnings, we are going to stay in a sort of a time correction. And in this period, as I said, the Nifty would not do anything special, but stocks will do exceedingly well. And there are many pockets that we are liking.
So Gautam, we are all ears. Tell us, what stocks does one need to be in to actually make money? And forget the index, like you said, that could very well consolidate for a long time.
Well, I think financial services has been our favorite. I think every time I have been on your channel in the last many months, I always spoke about the fact that financial services have shown relative outperformance in these last 5 months when everything collapsed. I mean, to see SDFC Bank at 1,700, I think is as commendable as it can get. And I think ICICI Bank, SBI, some of these stock banks have done exceedingly well. And the bank Nifty at levels of, current levels of about 49,000 itself, I think is quite a positive sign. So I think financial services technically, fundamentally based on smart money action, I believe is going to be one of the better trades for the next 6 to 12 months. This is followed by metals, which I think is going to be the star performer for the next 6 to 12 months. We are seeing some amazing charts. In fact, it's right on top of our list. And I think all top quality metal stocks could deliver anywhere between 20 to 40% from current levels. So these are my two favorite sectors where I think one can commit capital. Barring these two, power, infrastructure, real estate are three other pockets that we like. Everything else is pretty much an avoid.
If you like this video, then like, share and subscribe to ET Now.